ultimately, we talked about this in our class, right? Ultimately, all assets are there to, you know, hedge or to finance some future spending or liability, right? That's what you do. You like, I've got some money that I don't need to spend now, so I'll buy a stock or a bond, or I'll buy Bitcoin, and then when I need that money, I'll sell it. So the demand for money has the potential to tie all assets together, right? Because people, if all of a sudden people decide we're really worried, I want my cash now, they'll sell whatever they happen to own. So whether that's commodities or stocks or bonds, it doesn't matter. In a world where people want to have cash now, they want to have safety, all these assets are going to be tied together. So you get markets like Bitcoin that start off as being kind of a small, almost a sideshow, that really they shouldn't have any fundamental link to U.S. equities, right? I mean, U.S. equities are driven by the profitability of U.S. companies, and Bitcoin there's no cash flow to it. So it's like, why should they be correlated? And for a long time, they are seen as uncorrelated. But as the market matures, more people put money into it, then it becomes a potential source of liquidity in a crisis. And that gives it the potential to have a very high correlation with the S&P 500. So yeah, as markets become more integrated, they become more correlated. We see that with the Indian stock market used to kind of have almost no correlation with the U.S., and now it's probably like 60% correlated. And India is not even that integrated into the global market system. It's still difficult as a foreigner to trade Indian stocks, yet the correlation is very high.
Right. Right. And I think that's an interesting point you touched upon. I guess this ties back to the behavioral story, right? Something happens in the US market, and then you observe the Indian markets are reacting, or at least showing the similar direction of uptrend and downtrend, maybe not in the same amount in value, but maybe it's just emotions driving the market at some level, which is manifested into various institutions. And speaking of that, a comment I wanted to make about, cryptos being more integrated into, or being more intertwined with the reactions of the general traditional financial markets I guess it's one of the first times where retail investors have had the chance to, be the first movers into innovative product in the field of finance. Because usually when some innovation comes up, like let's say securitization, it was first the big institutions that stepped in and took advantage of it. And usually, these benefits are not passed on to the retail investors. But here, for the first time, retail investors are making their big move. And this again kind of ties me back to a comment you had made earlier this week during the guest lecture with Hari Krishnan. Is it possible for small players in the market to use leverage and behave like big players? And I guess we will see, but I guess they do, especially in the crypto markets, right? Retail investors have had the first moving advantage. What do you think about this? And leverage, it doesn't just have to be monetary leverage. It can also be a sense of community that exists within the decentralized finance industry. I guess leverage can be people coming together and believing in an idea, which is something we saw during the GameStop bubble going up and then crashing again. So what are your thoughts about this?
You raised a couple of interesting points. First of all, I guess I might differ from you in saying that retail investors have had a first mover advantage into crypto. I mean, certainly they were in crypto before institutions, but whether or not that's an advantage, I'm not so sure. Like it's, I've done some crypto trading myself, and you have to pay a lot to move your fiat into crypto, right? It's not cheap. So these decentralized or these crypto exchanges, they're very profitable because they're charging you 1.5%, 2% for something that costs them virtually nothing. So I think the first mover advantage is really in the people who are able to extract those extract those transactions costs. But to your second point about leverage, I think that's quite interesting because the the adoption and the spread of crypto has really forced central banks to react, to consider creating their own digital currencies, and has forced institutions to look at kind of adopting kind of blockchain technology in the way they behave as well. So that in that sense, yeah, they retail has kind of used their combined leverage to force existing institutions to react to them, which is quite unusual. Um, so I agree with that point.